The preparation and presentation of financial statements are different yet interconnected phases in the financial reporting process. Financial reporting is a process of communicating an organization's financial performance, that is, profit or loss, financial position, and cash flow position to stakeholders through financial statements. Preparation involves the identification, measurement, recording, classification, and summarizing the transactions and events to generate the financial statements. This stage focuses on the technical aspects of accounting. Step 1. Identification. Identification means spotting transactions and events related to the operation. Example, identifying purchases, sales, debt settlement transactions, etc. Step 2. Measurement. Measurement is measuring transactions and events in terms of money. Example, purchase of goods, $10,000. Sale of goods, $15,000. Step 3. Transaction recording. Transaction recording is accurately recording all financial transactions in journals and ledgers using the double entry bookkeeping system. Example, sales transaction, firstly record in the sales day book and post them in the debtors ledger and general ledger. Step 4. Classification. It is simply grouping similar items together. Example, in the recording stage, the ledger accounts are classified into assets, liabilities, equity, income, and expenditure. Step 5. Summarizing. Summarizing means condensing large amounts of recorded and classified accounting data into a concise overview, primarily through the trial balance and the main financial statements. The summarizing process involves preparing a trial balance to ensure the equality of debits and credits and identify any discrepancies. Making necessary adjustments for accruals, prepayments, and other items to ensure the accuracy of financial statements. Preparation of financial statements. Types of financial statements. Income statement or profit or loss and other comprehensive income statement. Balance sheet or statement of financial position. Statement of cash flows and statement of changes in equity. The relationship between the comprehensive accounting process and the preparation of financial statements. The accounting process includes identification, measurement, recording, classification, analyzing, and interpretation. However, the preparation of financial statements primarily focuses on identification, measurement, recording, classification, and summarizing. Accordingly, the preparation of financial statements is a key part of the financial accounting process. There is some level of analysis in the preparation of financial statements. Example, calculating provisions for doubtful debts, warranty obligations, or restructuring cost requires analyzing historical data, current conditions, and making informed estimates about future outcomes. However, detailed analysis and interpretation are the steps after the summarization. Presentation involves organizing and formatting the financial statements in a clear, concise, and understandable manner. Then you may have two questions. First one, what is organizing the financial statements? Second one, what is formatting the financial statements? Let's see these two components separately. First one, organizing the financial statements. Organizing the financial statements means arranging the components of financial statements in a logical and standard order so that users can easily understand the financial position and performance. Example: in the income statement, the order typically follows revenue, cost of sales, gross profit, expenses, net profit. Second one, formatting the financial statements. Formatting the financial statements refers to the visual layout and structure using proper headings, subtotals, alignment, spacing, and consistent fonts to make the statement easy to read and interpret. Example: in the balance sheet, using bold headings like current assets, non-current assets, and ensuring amounts are right aligned with proper currency symbols. Example: Sri Lankan rupees, US dollars, etc. Presentation of financial statements focuses on the communication aspect of financial reporting. As you have noted before, preparation of financial statements focuses the technical aspects of financial reporting. Classification. Classification means grouping similar items together to improve readability and comparability. Example: instead of listing every single type of office supply separately, a company might classify them under a single line called office supplies expenses on the income statement. Disclosure. Disclosure means providing sufficient information in the notes to the financial statements or in the body of the financial statements to improve the understandability. Example: a company's financial statements might have a note explaining the depreciation method used for its property, plant, and equipment. Example: straight line method, and the significant estimates involved in the determination of useful life. Another note might detail the terms and condition of outstanding loans. Format. Format is using a consistent format and layout to enhance user understanding. Example: consistently presenting the income statement with revenues at the top, followed by the cost of goods sold, gross profit, operating expenses, and finally net income. Using consistent headings, subheadings across the all financial statements also improves the readability. Comparability. Comparability means presenting financial statements for multiple periods to allow users to identify trends and patterns. Example: showing the income statement for the years ended 2025 and 2024 side by side allows users to easily see if revenue has increased or decreased and how expenses have changed over the time. Similarly, presenting balance sheet for 2 consecutive year ends allows users to track changes in assets and liabilities. Preparation generates the aggregated figures for the financial statements. Presentation organizes and arranges those figures within a specific format of financial statements. Let's think of it in this way. Imagine you have cooked a delicious meal, that is preparation. The presentation is the final step of plating the food beautifully, garnishing it appropriately, and setting the table elegantly. Without proper presentation, even the tastiest meal might not be appealing or enjoyable. In conclusion, while preparation lays the foundation, presentation is the final touch that brings the financial statements to life and makes them a valuable tool for decision making. I hope this helped you to understand the difference and relationship between preparation and presentation of financial statements. Keep practicing, stay curious, and let accounting work for you. See you in the next video.